or I should say, I could start out by asking you guys a question. What do you see in this chart where we bounced off this level? Like after yesterday's lesson, what can you tell me about this move? How we were talking about all this stuff that was happening yesterday with the backside valleys and, you know, ladder points. What can you guys tell me about this? Tell me something really important about this. Let's see if anybody can get this one. Another question is, what's the first thing you guys would check? What's the very first thing you guys would check here? 1 hour origin respect, failed to close the value, respected, almost 15.5, 3D polarized points. You got the 1 hour origin, so you're talking about like this guy right here. First thing you check, time frame. Good start. So everybody's so focused in on this hourly, but think back to what I said yesterday. Higher, like something like this right here. Downtrend there. Possibly, yes. Have trend from, say, this point here, localized from here. I'm staying on this time frame. You'd have to walk through this move, but be here to here, here, the yaw, 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 right there. First, there's a trend break there for sure. This is absolutely correct. But remember when we talked yesterday about, hey, backside bouncing, it's not established yet. It's too early in the move. Well, it's also too high in time frame. Remember how we were deciding between the 15-minute yesterday and the 15-minute backside and the hourly? Well, guess what? We just confirmed it's the 15. So now we got to hold this 15. So there's your perfect entry. You would have got perfect entry today to, I don't know if you would have got perfect entry here. You might have missed this one, but yeah, pretty nasty trade right here. So I think one of the key takeaways from yesterday is that everybody was so focused on the hourly. But if you remember, I did say, like, okay, the hourly is fine and that's great, but nothing is established yet. So rewind back to yesterday. Here, I believe it was kind of right in around here. Is it going to be the hourly, the 15 it bounces? Yeah, it was like right in around here where we were talking about this stuff. We confirm it's so if we can confirm it's the 15, you can just simply buy the next 15 backside, which would have been right there. Well, you would have had a few here. You would have had this, this, and this, right? So you would have had a few. You can't really have that. This is more the backside right here. And then this is your grouping of front sides. So you have this and that. Hourly would have been up here. So if you know you're going after the if you know you're going after the 15 on this side, go after the 15 on this side. That was one of the key things I was trying to say from yesterday, was that there's yeah, you're going to hit the valleys that are going to continue in succession. I don't think this remains to be a good entry, but for a quick trade here, yeah, it would have been not bad. I think in this trade, you're supposed to go up to this level here, or at least the backside valley right here. 15 on the backside, ladder off that. So I think that's pretty cool. I think that's pretty cool to see that. And yeah, I mean, once you break this, you're probably going after an hourly front side. Wow, what a bounce off this yesterday. That's impressive, 4%. Always about trying to find that trail of events that happens, because this here confirms it right here. This confirms that it's a 15. I might have actually missed that yesterday. I'm not sure. I can't remember if we did it before. We were doing our lesson before that happened or after. I can't remember. But anyways, yeah, follow the trail, as always. What does MD have? Oh, there's another trend that it's hitting right now. I have to do your trend work here, but I think, not you, I'm saying anybody. Don't have to do trend work. So this will become a weekly in the future. So for now, we can only use something like the 4 hour. I'm assuming it's the 4 hour. Yeah. So we can only use a 4 hour. You'd have two trends. You'd have the interior, which is this one, which is the one I did. And then you'd have the one you did, MD, which would be like this. You can't use this though. Now you have to start higher time frame. Now you have to start from the daily almost and down. Yeah, you can't even really use this, can you? Tough. Be tough to use this. You have to use more of an interior range at that point. So you'd be like this then, right now. You'd have to find the hourly, right? That, and then you'd be that. So that's where you'd be. So it'd be on the hourly, because you can't use that 4 hour. So you have to use the hourly. And the hourly is a trend that was created that never broke. So that's where you're getting these like perfect touches, is from that hourly. I'm not sure. That's probably what you have actually, isn't it? MD, because you can't use the 4 here. The 4 is not usable. There's nothing to attach it to. So you'd either have to go local like this for a local trend, which just ends up basically giving you this, or maybe even smaller time frame this. I'm not sure unless you walk through it. Or you'd have to go 4 hour here, down, back in the moment that it happened. You'd have to go back to here, right? Active and non-active trends, the difference. And at first it would have been like this, right? Then it would have been here, which doesn't hard close. So active and non-active. But I got that one right. Okay, good. So that's what you're looking at. And that's where you see this trend is getting hit here. Well, we're going to kick this thing off in 3 minutes. It's early and it's on a Sunday. So I just want to make sure everybody's in the group here. Got the replays up yesterday. Hopefully I'll be able to add this one today, and I'll fix people's accounts today as well. People who messaged me yesterday saying their accounts blinked. So there's kind of a hierarchy to all these lessons. There's definitely a hierarchy that follows what we study from zero, right? So like the lessons previous were all about ladder points. Now we're getting into final hold levels and final lows and final hold levels and interior trends, right? So this is kind of exactly what we're looking at right here, right now. You know, interior trends, final hold levels. This naturally has to come after ladder points, because you have to first kind of understand that you have ladder points in the charts. And then once you understand ladder points and kind of what they represent and how they work, then you start diving into some more of the lower moments, or the final moments, I suppose you'd call it. The final holds, the final lows, things that can hold a move or create a ladder point. So there's kind of a logical flow that happens with these charts, and the way I teach it is that you have to learn ladder points first, and then now we're starting to get into what can create ladder points and the dissection of that. Clarity flow on the 15, enter greediest 5-minute greediest points, free money. Let's see the 5-minute actually quickly before we go. I haven't really even checked these charts that much. Got the 5-minute right here, right? So you've got the point that would hold this move up, right? So you've got your 15 here, right? Your 15 is tested. At that point, you would go right here, right? So that's your next 5-minute chart. So this is the same as the 15. I'm just marking it as the 5, which is perfectly fine. And then you'd have this right here, which is the reverse or the hold on the 15. It's perfectly fine. Either one works. They're both almost the same trade. So it doesn't really matter here, like which one you're using. In this scenario, would I take this trade? I mean, I would take it, but I wouldn't be surprised to see it test down these lower ranges, just because there is a few 15-minute levels here. Like if you're using this as your indicator, as okay, there's 15-minute levels. The front side would get tested here, right? Because this is already tested on the 15. So you can kind of already guarantee that the 15-minute is holding this, right? Like when this establishes in the moment and 9:30 hits and it's like, oh, it hits the 15-minute greediest level and just rips straight off, right? So it really leaves you with this and this. So these are kind of your two levels. And at that point, I would marquee 57,745 just up at 57,800, just because it's testing not only like the interior backside, because you do have kind of two backside valleys here. Not only is it testing this, in its encumbrance, it's also testing the it's testing both the 15 and the top of the front side. So these definitely do look like smarter entries. If you do enter here, yeah, you've got to play a really tight stop, because you can't let this thing ladder, because it's just going to kind of collapse down. So maybe 57,800 is your smartest entry here, but you can pretty much guarantee it's the 15-minute hold level. You can guarantee it's back here when this hits the backside. As this hits the backside, that hits the backside. This backside, obviously this one up here is a pretty high up in the range, but it is still a backside, and that's fine. It's just the backside of this interior valley here. With this level, you're down in here. Or I would look at the hourly front side, which is actually not in existence. So maybe you're going to try to go down and hold this next. Although you have tested it, so not so certain about that. I think maybe you can ladder off the hourly backside right here. I think that would be your greediest entry here, the backside reverse. I think that's, the point that breaks it out is the point that can hold the move up, which is likely going to be something. No, there's not really any origin levels, is there? This is already hit. So maybe laddering off of this to the next level, which would be the backside here. It's possible. But again, I would be looking more down in this range here instead of at that stuff. So just a few quick notes on what I would be looking at here. You can leave those up. That's fine. And that's if we are indeed moving up. So I would leave it at that. And like I said, this is a fine trade to take, but your stop has to be pretty tight on this one, just because it's it's pretty hard to the next move. 839, the 1 minute hold from back here, I'm assuming. Assumingly it's going after the reverse level right here. 15-minute to 15-minute, that would make sense. There's probably an hourly as well, so it's just like hourly and hourly reverse, continuing the ladder, 1 minute hold, somewhere in here, supposedly. Yeah, that's just like the greediest point of the move. So you're going to have like the 1 minute hold level right there, right? You're going to have something like this, which I don't really think you're marking this as a 1 minute hold. Like you're not, you wouldn't be. That's fine. You can mark it. That's perfectly fine. Like you would more likely at that point be right here. It's 57.7 right there. But you mark this, and if you do your other work, you can see that there's some reverse levels there that can hold it down, and then it just becomes like, okay, well, that makes a little bit more sense than using a 1 minute hold. The 1 minute hold is perfectly fine too. It's when you have that kind of cohesion there, like, okay, you've got 15-minute here or here, which is like the same thing. It's kind of already tested there. So then you're going up in time. There's a 4 hour here anywhere. Nope, 4 hours up much higher. You may even be here next at 60,500. The hourly is kind of tested too, right? Yeah, so it's just kind of laddering off that. The move is definitely not over though. Like this is definitely, it's still relatively close to there. Like it's still relatively close, laddering off this part, right? Going to the next range. Would that be low risk? I'm not sure. I haven't analyzed the move too much. I haven't looked at it outside of just what you saw me do. Maybe backside here is a smarter justification. Backside continuously holding the move. So now you'd be looking, yeah, backside here, hourly. So now you'd be looking for the confirmation of this right here, which you have. So now you need to break under this backside hourly right here. So there's where your entry comes into place right there. And you'd be holding that. Yeah, that would be a good short. That would actually be a really good short. It's much smarter. Just didn't check high enough time frame. Like it takes time, right? takes time to see these things. You have to just kind of go through time frames. Always start top down, because when you're going from bottom up, you can find all the justifications, and then you're like, oh, well, I guess the 1 minute's not right because the 5 minutes right. Oh, I guess 5 minutes not right because of 15. Oh, I guess the hourly sucks because you didn't check the backside. You know, it's like you always start time frame down. Otherwise, you're just kind of spinning your wheels. But then it becomes pretty clear here. Hourly backside confirms here. So now you need to kind of create and hold another hourly backside. So this is like the polarized point of the move, like right here. This is like the polarity of the move. So if you were to take a long, I would now, after seeing this, I definitely wouldn't be buying right here. If I was longing, I would try to long some type of dive to this level, because if this holds, then obviously polarities, it's going to rip the move up. Unless you're going after a 4-hour front side now, which is possible too. You go here, go after the reverse, see what it creates. Like there's a lot of stuff in here that can create a move down still. So, okay, let's get to it. I'm going to turn off the music. Music's already off. What am I doing? Okay, of course.
This is like,
anyways, hopefully that quick little wrap up there helps people. And I really think this weekend's lessons are more about understanding these components working together. As to before, when we were doing mentorship, it was kind of one piece. We talk about one specific thing. We're now getting into like mixing theories and using a broader part of our mind, instead of just saying, oh, well, you want to go after this trend. Now I'm doing away with like that information, because I do believe at this point in butterfly effect. Jesus, no thumbs up again. I'm so bad at that. I do believe at this point in mentorship and butterfly effect, people really should be at that point where they're not looking for singular theories, which is fine. I mean, that's good. We look for singular theories. That's important. But you know, multiple single theories together is a higher form, right? Because now, instead of just hyper focusing on the ultimate one theory, you're hyper focusing on using all of those theories combined, and they all become ultimate theories. So now it's about combining more and more pieces together and using a broader stroke of our mind. So for new mentees, that's okay. If you're not quite there yet, you'll get there. Just watch the replays, study hard, and yeah. We continue on.
This is what we say, right? We say, has the final low been hit? If the final low has been hit, has the final hold been created, right? So the final low point of the move creates your final hold. So importantly, this is the first event that happens to create the more important event of the final hold. So now you have your final trend and your final hold level. So now we actually have something we can use with trends, because this is actually creating very important hierarchy on our charts. This is creating something that's a point of polarization. And as we go forward, this is obviously crucial information. So this is very, very important to know, right? And so
just a quick note here, final low, final hold could very much be interpreted as that 1 minute there as well. The video's a little low. Okay, I'll turn it up. That final hold, final low, it absolutely could be interpreted as this 1 minute as being the final part of that move, right? Absolutely could be interpreted as that. I don't necessarily think that. So this is where I think a lot of people will make the mistake in not understanding if something is moving up or down, and be able to assess what the important moments of the chart are. Like by seeing this 1 hour backside here, we've understood that if this can create a 1 hour backside, we've now created a point of polarity here. Like this is critical to understand, right? This is important to know that the events that are happening now are prescribing or sketching out the events of the future. So now, because we've seen that this 1 hourly backside is a confirmation, we know that this is like the origin point holding the move. So there's going to be like a really big event that happens here before the larger events take place, right? And so when you see these kind of ladder points, that 1 minute, that's, wherever that ended up being, I think it was like right here, somebody said, they're right in around here, that 1 minute level being the final low of the move. Well, this is actually correct. So it is the final low of the move, but there's also other things, like things in confluence, right? There's also other pieces of the chart that, by that being in agreement, like, okay, this is the final low, the final hold of the move. If that breaks, it's breaking the range and it's going up into a much larger spectrum of this move. Okay, final low, final hold gets hit. Yes, that happens. What does that mean? Larger time frame. So it's like a conglomeration of these events happening all at once. Like, yes, you did hit the final low of the move, the final hold level, the 1 minute hold, the greediest point. When that confirms, it's always good to check other timeframes to see what's happening, because in this scenario, it created the perfect 1 hour backside short opportunity right here. And now you can see that here's the point of polarity. So that little 1 minute hold level filled in the criteria for all it completed the outline of the sketch, you know, and all these events are just coloring the rest of it in.
What is trying to be created always is the question we ask ourselves.
Hopefully this video is a little louder now.
Again, we pull back to that. What is trying to be created here? It's just
I'll
still
turn it up a little bit. Is that okay?
Okay, what is trying to be created? A new low in the move, because distribution is happening. And what's happening here? You're hitting the same thing. And instead of hitting the break of the move, you just adapted to whatever point this is, the greedy or hold level. And as long as you haven't hit this leg of the move here, you're kind of still in that range where you're, even within that, you have the greedy weekly level up here. There's a
1 hour polarity acts as that because it's confirming the moves just like yesterday. Watch yesterday's review, hi guy. That will fill you in on why, because we talked about this why yesterday, just like we did this morning with a 15-minute on this side.
A greedier level up here on the weekly.
Good volume. Okay,
that
perfect.
Be,
or if somebody wants to type in chat so we can continue the lesson. If they
the confines of its
want to answer that, feel free.
Right? What is trying to be created? Distribution, right? So we know the distribution is trying to be created off this level being hit.
Here, hold on, let me pause this. It's kind of the same thing we talked about yesterday, where and this morning, where you have a 15-minute confirming a 15-minute. Once this breaks, once this level gives up, it will act as a major point of support in the future. Like once this breaks, because it's like, remember yesterday when we said 1, 2, 3 back down here, we said, oh, it's not really confirmed yet because the third part of the move hasn't happened. Same thing on this side. Hourly backside first one, second one is confirming it. If we get over top of this, is going to act as major resistance in the future. This will be like a critical resistance point in the future. Hopefully that makes sense. So that's why it's acting as polarity now, because if it loses it, it'll be impossible to regain it in the future. But if it holds, which means it's going to try to hold. It's just that complete point of polarity. If it loses the move, it's like critical resistance in the future. And it's the next short opportunity. So if you were in a trade now, you'd look to short and like, I'm not saying short right now. I'm saying if you were in a short, you would look for this to break, and then you would look to get out somewhere around the latter point so that you could re-enter this, because you know this is going to fail it down in the future for a much lower move.
We're going to have a final low by just tracing through the move. We know there's going to be a final hold based on that final low. And then
so by losing that level, by that being there on the charts right now, we know what losing it means, which makes it a point of polarity,
right? Versus how many trends it has it broken,
which makes it a perfect ladder point for longs as well.
You know, up to this point, it's been pretty heavy in theory. Now we are going to get to the
not necessarily. It could be an origin level, right? Then you start getting into the creation of origin levels. Origin levels sometimes break, sometimes hold.
Been created yet. We know that.
Then you have the criteria for what's an origin level.
What happens is we have trends. Like we would
origin levels don't always break. Sometimes they hold.
This move, maybe,
the other events tell you if the origin's going to break or hold.
You know, the very first
you can't answer that yet. You have to see if it holds or rejects first, because it's not an origin yet.
Low on this move. So we have trend created there. How much viscosity does it have? The amount of strength is very high, so it's not going to hit that final low because the viscosity.
And so when I'm saying viscosity here, I would relate that viscosity term. I would connect it to the exterior trend. How much viscosity does it have? So that I would relate that to the exterior trend here. That exterior trend is a viscosity. How strong is that trend? So how much viscosity to create these moves? I would connect that term to the exterior moments.
Too high in the move, so we hit our final low when the viscosity reduces down to 0, right? And viscosity
can't be a break level because it's already tested.
Trends. So we're going to see this trend follow through. And this trend, it's still how much viscosity?
Inverse origin, if it breaks down, yes, backside valley that continues to hold. Ladder pointing it. Yep.
We have our first broken trend. So now we can do this. Well, it's broken 1 out of 5 trends. So the viscosity is kind of like medium to high, somewhere in between this range, right? Medium to high. So we've broken.
So then I would also look at this right here. Hold on, let me just change my screens here so I can make sure my mouse is active while I'm talking to you guys here. So with 1 second. With this trend right here and viscosity and kind of like a counter in your mind, you would think that the viscosity of this larger trend is high. Like it's very strong, right? It's got high viscosity to bounce the move. It's a legacy trend. It should. And so it does. And then the attacking of that legacy trend or global, whatever this is, global or legacy, I'm not sure. But anyways, it's not a local trend. I can tell you that because it's not coming from the local part of the move. So this trend here, I would look at the interior scope. So this trend I'm drawing right now as a viscosity counter against this trend. Now, I don't use viscosity counter. It's in my mind. This is a term that I use to describe to people how the breaking of a trend happens. But when you're looking at final lows and final holds of a move, this kind of idea of like a counter of how many interior trends have broken, that's just cycling against the larger trend. So you just have to see this as like a microcycle against the larger trend. True, 5 minute and 15 inverts are being respected since the top yesterday. 59, 482 yesterday night. Yeah, and you know what? It definitely could be 5 and 15 minutes. I'm seeing the hourly backside, and that's where I started. I never dove down in timeframes. There could indeed be, you don't see the 15 backside here, the 15 backside here. It also could indeed, you're right, it could indeed be this 15. So in previous moments, we had talked about 15s attacking 15s, hourlies attacking hourlies. So that's also something I would go through here and take a look at. But what I can tell you is that this, in both cases of the 15 and the hourly, is the polarity of the move, because this is what's going to create that next leg for this.
Broken one trend.
Good one on that, MD.
We do now have to adapt that. Oh, okay. So we have our next point here, right?
The polarity trend.
One trend, right? Let's look at our next trend, right? And the viscosity and the way it can hold this move is still high. So it's still, a great trend, and it's still moving up
and so I would look at this as also, again, laddering the move to hold levels, right?
In a very big way, and it hits its level, and right to the bottom of the trend, and bang, breaks. Oh, okay, now we're it's broken too. And
I would look at this the same way as I would look at cycles.
This 5,
right?
like 5 times
1, 2, 3, 4, 5. It's almost like the same thing. It's just that you're tying
15
trends and holds and everything together.
By legacy events, which we won't talk about today. It's dictated by legacy events. More importantly, here is starting to understand the viscosity of trends and how they work. So then, okay, fine. So we've broken another trend here. This is good. We've actually started to do something here. Let me break another trend down here. And this could possibly be not quite done this year. We've got to create kind of
that would be the correct trend there. I
right
don't
here,
think that one hard close from the resolution on my screen. I can see it doesn't really look like it.
This one breaks right there. So it actually does break its next trend. So now we're kind of at medium viscosity. So this is just starting to dwindle off this move, right? It's starting to taper off. We've already broken,
starting to ladder down.
Viscosity is kind of reducing in this trade, and then we're at this point here, which is, you could possibly say that this never actually broke the trend, because maybe on a higher time frame it didn't actually create a low, and there is actually no low there. So actually I would say that is broken. You're simply fanning out trend here, and this trend is getting ready to stop supporting the move, right? Like we've already broken this trend, and the viscosity is getting lower on it, right? So we've broken
the time frame.
When we break 4 and 5, you have to kind of think
polarity exists on all time frames, and the higher the time frame, the bigger the polarity.
Hold level, which is what we're seeing back here, and it'll bounce off a hold level to break a 2 to create a 3 and a 4 and a 5. Possibly we've already created that origin point right here. There's quite possibly an origin level right
time
here.
Frame relevant.
We can work back in time frames and find that origin level, which actually looks like it might be right here. This is the origin level right here. So eventually over time, if you were to flip this chart over, and
look at that beautiful
here's
backside.
an origin level, and here's your hold level. So you're going to hold this part of the move right here. We can simply delete this. The greediest.
I would say the higher the time frame, the bigger the polarity is.
That's fine.
But I think that's kind of obvious. It's like you break a weekly trend.
If this continues to hold,
let's talk about that for a second. It's kind of obvious. Like you break a weekly trend, you have a big move, you hit a daily hold level, you have a nice hold. So I think you always have to look at this as time frame relevant. I think if you can understand there's like a larger part of the move happening out here. Wow, I don't know why my trading view is so laggy. It's so weird. It's so choppy. So there's a larger event out here happening, okay? You can diminish this down to, for our example, 4-hour events, daily events, possibly even, no, it couldn't be a weekly event. So if you can diminish this or move this up in your mind, or reduce it down, diminish it down, reduce it down to like a larger time frame events, 4-hour and daily. So then you have like 15-minute levels that are being hit, and 5-minute levels, and all these things like that. And inside here, you have maybe like a 15-minute. We're going to go with 15, 15 or an hour. It doesn't matter, I guess, 15 or an hour. You have an hourly backside here. You have the hourly backside here. When this breaks, is it also breaking all these components to the move? Because this indeed could be, in a way, its own final hold level. because if these moments down here aren't broken. But if they had already been tested, right? Like if this had already tested this stuff down here and it gets to this, and it does kind of the same thing where it creates like the hourly backside, say it goes like up to here, right? And then it starts doing the same thing and it's got like, oh my God, there's an hourly backside. Then you would say, oh, well, this hourly backside can just go and test this down here. This may be the thing that breaks the daily or the 4-hour levels, because interior, it's the final hold interior that's holding the entire exterior. So you can have moments where like an hourly or 15-minute level just completely crushes the chart, and you're like, well, what about the daily? But the thing that you didn't see is like, oh, the 15-minute already had happened here, 15-minute here. So really the only thing left that can hold it is a higher time frame front side, which would be right here, or like a final hold, final low down here. So if you do indeed hit this, and that's the hourly front side, and then you create that same, polarity point and then lose that, this right here may lose this entire thing. So like you can have lower points of polarity, break that, but you have to be able to see that happening. You can't just say, oh, every hourly breaks every big time frame. It doesn't obviously it doesn't work like that, right? But you can kind of understand that if there's like a daily hold level down here, right? Or like a 4-hour or something, but you do have these trails like 15, 15, 15, all of a sudden you have an hourly front side. This isn't tested, but you do test this hourly front side, or this is like a 4-hour. This one is a 4-hour right here. This is a 4-hour maybe. You know that if these are 15 minutes and all of a sudden you lose all the 15-minute backsides, right? And the hourly front side gets hit and you lose that hourly front side, you've in essence lost like the entire, Jesus, my trading view is really choppy right now. Anybody else have a choppy trading view, or is it just me? You lose that whole piece of the move, right? It's not, you're not going to just say like, oh, forget that. Like it works together. A little more advanced than what we're used to with butterfly effect, but that's okay. I think it's okay to tell you guys that stuff. Rewatch the replays, Chocolate Cocoa. We've been talking about it for the past 2 days.
Going to break this origin level and go after its upper range, which its upper range is right here, the final hold, which will create, it'll create our final low. It is our final low, sorry, which will create our final trend, which creates its final hold of the move, right? So just in order to move down again. So
hourly backside.
You flip this over,
Chocolate Cocoa.
It becomes a little easier to see on the side of accumulation because we're so trained to see that. So, as we break this trend again, we are now starting to attack the order.
I just want to make sure you understand this. We mark this right here because in the future, it's a possible point of polarity. The hourly backside, because we have an hourly backside here and here as well. We have one here. We have one here. This would be the next one right here. This is the next hourly backside. So this has got to hold. Otherwise, it creates the next hourly distribution level before it happens. We lose 15 plus hourly, we lose all. If there's a 4-hour, you could attack the 4-hour, yes. In this case, you're already attacking a 4-hour, so you can't. Maybe you can go to a 4-hour front side down here, possible, but it's kind of hard to say without seeing what's happening in the move first. Like you're stepping 3 and 4 steps into the future. So it's kind of hard to say, but in theory, you could.
Origin point of this move.
So at this point, if we were to test a greedier level inside that 1-hour backside, say the front side 15-minute, do you consider it to be breaking the pattern or still respecting the 1 hour as it hard closes? I think that question goes well beyond the scope of Butterfly Effect 1. And not that it's a bad question, but we're just getting further and deeper into new concepts that haven't been talked about yet. So I would just say, test it, see if you like it. More importantly for now is understanding like points of polarity, because that's what we're getting into, like final levels, points of polarity, before like hop skipping too far into like what could or could not. Because unless you're using that exact information to make trades, it kind of just becomes blender food, where you may go into this routine of testing and trying it, and it may work and it may not. And you're using a lot of, like, remember the VOD, right? Like put your focus to where the concepts that are making sense in the trail of order. And I'm not saying it's bad. It's good to have these questions. It's just, where does your study focus go? The polarity trail established on the hourly would breaking up invalidate. Geez, I opened a can of worms with this stuff, huh? This is what happens when I show you. This is what happens when I show you guys stuff that's outside of Butterfly Effect. And that's okay. I don't mind. I think it's good. I think it's good for learning because it's got your guys' brain spinning in 1,000 ways, which is good. It's good. Okay, let me reread this. So now that the polarity trail is established on the hourly, would breaking up invalidate a higher ladder point? So now I think you need to look at the 15-minute levels once you break that hourly. First, I think you need to confirm that this isn't a 15-minute backside, because I didn't do that. So you need to confirm that there is no 15-minute backside being tested here, which there is a 15-minute backside as well as an hourly tested here. So the first thing I would do is I would go to see, okay, is this actually, because that's kind of the same thing that happened to us yesterday, right? We mark the hourly just like we marked the hourly here, but indeed it could actually be a 15-minute here. So that's the first thing I would define. What, are we looking at a 15 or are we actually looking at hourly? Because I just marked the hourly because it was convenient for the example. But that's what happened to us yesterday. We marked the hourly and the 15, and then it held the 15. So this is probably, I'm going to assume that there's a 15-minute backside here somewhere that it's holding, a reverse 15 or something. But again, I'm not going to dig into the example to see that. I'll leave you guys do that for an exercise, kind of a cool exercise. So that's the first thing that you have to define. Because if you define the hourly and it's the 15, well, you're just automatically going to make mistakes. So that's the first thing I would say. If you, what was your question? Would breaking up invalidate the higher ladder point? So breaking up would just go after the higher time frame part of the move that can hold it. We spoke about that in FOT, succession versus failure. A 4-hour or bigger time frame cannot confirm lower time frames are invalidating. Yes, exactly. It's like lower time, like the only thing that can stop this now is like a higher time frame front side or like a final hold. Happens if that polarity doesn't break, will cause rejection. Can't tell that yet. Gotcha. We were drifting towards focus. Yep. Information seeking is good. It's good. It's just that I'm teaching you guys too well, because now you're asking the real questions.
Move. So let's say we just come back down and simply,
like I said, they're good questions. I just don't like, the only thing I would want people to not fall into is, because I've seen, like, trust me, I've seen this with a lot of people, and a lot of people who like the outcomes are typically they are not good outcomes. I can't say they're always bad outcomes, because I don't always know what happens with every single trader. But from what I've seen, when I do see, I'm going to call this trader meltdown, and we're going to define trader meltdown as anybody who's completely failed and becomes extremely toxic to somebody who just makes a few bad trades. There's some points of failure in there. So what I see typically, people get ahead of themselves. They start implying theories, and then they apply the implies. So they imply knowledge, and then they apply what they've implied. That makes sense. It's kind of a tongue twister. They imply, I-M-P-L-Y. They imply that they know what's happening. So they imply a theory that may or may not be true, or a theory that may indeed be true, but isn't being used properly. They apply it at that point, A-P-P-L-Y. They imply it, and then they apply it, and it causes them to lose money. Then it turns into trader failure, which then turns toxic, between not being a trader, just losing a position, being frustrated, negativity cycles, the cyclone of destruction inside of the valley of disappointment, now using their energy focus to learn improper techniques. There's such a queue of things that can happen there. It would just caution people, right? Yeah, Starlight has it correct. Excessive information seeking leads to paralysis. So I think like what we're doing today really opens the box for people, because I think these last two lessons of laddering, and this is explaining how moves and the architecture, how pieces of it start to become structured, right? Like this is now getting into a much deeper set of information. Like you remember how we were around lesson 15? I think it's 15. And the first part of it was just about introducing tools. Then you step into the second hemisphere, which is understanding how to use them. You're getting towards the end of that right now, which is starting to become polarities, like using all those tools together. So now you're starting to get into understanding like a deeper part of butterfly effect, because the core, like, although the theories may be straightforward, you can watch it on YouTube and it's all straightforward, or GateX or wherever. Actually using them, they're like 5 and 6 and 7 layers deep. 1 second, guys. I need a water. My throat's starting to kill me. Okay, good. And so now people are starting to ask those questions, or put the pieces of the puzzle together, where it's like, okay, I'm really starting to understand polarity, because polarity is a big one. Polarity is the over-encompassing piece that leads to the big moves, right? So people are starting to realize, hey, polarity, they're starting to be able to understand the why and what and how these moves work. Like, oh, a backside can only target a front side on certain time frames. And if you lose this point, it means you're going to a very specific exact next point. So people are starting to be able to finally see that, which is great, which is exactly where people should be at this point. So these questions you guys are asking right now is like, so makes me so happy to see, because it means that you guys are like on the right path, asking the correct questions.
Now we break.
Wait, I guess I should read chat before I continue. Not asking any question to be true. I am behind here. Just got to watch replays and work more. Yep. I've been guilty of that for sure. You need to stick with what you understand when it comes to an actual trade. IE reverse levels have screwed me many times. Yep. Kardik, I think what you're seeing is you and Chocolate Cocoa will express more of these things because it's new to you. So I think it's something that everybody feels. It's just you two will be more expressive because it's like, wait, there's other pieces missing here, right?
Trend, right? This is kind of the points of reversal where you're going to start seeing reversal. So how much viscosity does it have left? And how many times is it broken? We step forward one in the future and we're going to say four. Now the viscosity is getting kind of low. As you lose viscosity in a trend, what is an original trend? As you lose that viscosity, you're going after more of these origin points to have a collapse in the move. So then something interesting happened. So we use all these trends, and this has kind of been this defining factor of how many holds it has, and all these pieces together that we look at hold levels that create these trend points, and you're going to get to this final low. Something very interesting happens there, right? This goes to here. So fine, we've created that.
So I think that's an interesting point of polarity too, is the next piece of this that we'll talk about is the final hold, final low. When you have something like what we're describing here is possibly the breaking down of the level before it happens, right? The hourly backside. I think this is a scenario where you can start to target higher time frames. You're talking about final lows, final holds. I think this is a scenario where you can start targeting bigger time frames. So I would take this off. I would take this off. That's the 4-hour test. The 4-hour body is here. So you could start with these two, and now you can start to look for final holds, final lows. Now you can start to look inside of here. You know, this hourly is already tested, so you don't really want to use that. And this 15 is tested, so maybe there's a level inside of here that describes the front side 4 hours. So what we're going to do is we're going to mark this for this example, so I can show you guys what I mean. We're going to call this the 4-hour, and this will be the 4-hour reverse. So we can just go like this. Yep, okay, that's good. And we'll just go like a dotted line. This is tested. It could be candidate for reverse. Good. Nice and easy and clean. 4-hour, 4-hour. And what could be inside of there, right? So now we can look inside of this right here. We've already seen the hourly. There's nothing in the hourly. This isn't going to count here. Go to the 15-minute. And start marking some 15-minute levels. Well, there's not really anything right there either, is there? But there is something right here. So you got a 15-minute front side here. That 15 front was tested. This could be the final low, final hold on the 15, on the 4, on the, we're just going to color this one gray. Go down further. This isn't tested, nor is this. I would be more comfortable with this right here. That's the 15-minute. That's the 5-minute right there. Let's just skip all this and find the one. See if there's any really ridiculous point. First in here. Got a 1 minute right there. You've also got a 1 minute right here. This is inside of that 15, so I do not mind this right here at all. That's one final hold level. Another one. Here. God, my trading view is boinked. So slow. Crazy. There. Versus there. Here's another one. Here. Dude, I really need to refresh my trading view or something. This is like I think now you've found when something breaks, like what could be considered a final low, final hold. I guess we need to go to the 4 hour here because we marked that 4 hour. Final hold on the reverse, which was the possible polarity of the move and what it needs to hold up. You got this. I'm not going to use this. I'm not going to use this. You've got 3 levels here. This one hits, it's testing the 4 hour, which means that will be the ladder it needs to create to move it up. This one hits, obviously it's creating a higher range. So this one creates a range. This one creates a ladder point. This is more attacking the move to break down. This I don't think is possible just due to the trend. So immediately, what is this pink line? Okay, I don't want to get into like charting out this whole thing because the first thing I would say, okay, can we hold this? Like, what did this test? Can we hold that? I believe it just tests trend if memory serves me right. I believe this is a pretty long trend. So at that point, I don't think I would use this. And if it does bounce it, you would have to rip over top of this 4 or over top. At that point, it would have to be a minimum over the top of the 4 because it's not going to, trend is going to be much higher when it hits. I mean, it could drop straight today. So like where are we at this candle right here? It's like almost equal to where the 4 hour body is. So like you're really close. So whatever, pick your poison here. That's fine. They're going to kind of represent the same thing. You're not going to hard close a 4 hour above one and below the other. And it's like, oh, I don't know what's happening. Like you pick your poison there. So we'll just delete this one here because we can use trend. No, we'll leave the level. That's fine. We'll leave the level. So this is creating an interior range. This is creating a ladder point. This is kind of like premature failure. So I think you've got final moments in this trade now. I think you've got final levels. So that's how I would look at final holds, final lows. In this scenario, each scenario is going to have different final holds, final lows. But realize that once you lose this hourly, those are the things that can offset that hourly because they are polarity for what's being held up larger. So like this here is being held up larger on the 4 hour because it's kind of like 4 hour backside, 4 hour front side, right? So you've got 4 hour backside, 1 hour front side. And then you have to kind of close over top of this while holding this. I believe that 4 hours here. Yes, that's the 4 hour level. This is the body right here. So actually that's the body right there. So you don't want to mark that hourly. This is the body right here. I needed to mark that for this example. So forget what I said about the 1 hour. Hit this 1 minute level. Hard close a bigger time frame over this. Jesus, my trading view is so slow. So when you're looking for these final moments, you need to look for them inside of the time frames, right? So this could represent the 4 hour front side. So you get a little bit of a better entry there. You start closing over top of that 4 hour front side. It creates it as a reverse level. Even better is that you do something like this. You go, you attack it, and you bounce right over top of it and create your body right here. And this just becomes, all of this just becomes the wick because that could make it a reverse point ladder in the future because that could just be like the greediest entry on the reverse point ladder. So then you can start to see how you can create these different things and the reaction of the different levels will give you those points, right? So when you're creating final lows, final holds, you often need to look inside the time frame that's active. So active time frames, obviously something that I haven't talked about, more butterfly effect 2 stuff, but I think you guys can put the pieces together, the puzzle for active time frames, active trends. They fall under the same umbrella of what's actually being used in the move. So active versus inactive. We have inactive levels all over the place and we have active levels, and the active levels are the ones that it attacks. So I think this will help fill in some of those pieces for those of you who are at that point. And for people who don't understand it, don't worry about it. We'll talk about it in the future. But that should help at a minimum define when we talk about final hold levels, where they can be. Not just marking, hey, here's the next untested 1 minute. Well, for sure. But then you have to understand what caused that. Is it a ladder? What do you need to gain? You can just mark this one down here and be like, oh yeah, that's final hold level. Sure, it might hit, but then you have to understand where it needs to go after that by understanding the bigger pieces. Like, yeah, okay, of course it can hit. And you could just mark it and be in no man's land. And that's where, I think it was yesterday, I asked people, okay, what's your weaknesses? Like I screenshotted that. And a lot of people said exits. Well, this is where you're failing on exits because you're not understanding where, it's not about that you're not understanding. We're just not there yet in the material. You can't see what actually needs to be hit next, the base. Like you can't see your exit if you don't understand the architecture of the move. So I think that will that little example will help a lot of people understand, because that's like critical information there.
That point here off of this.
I'll wait till Starlight's done. Starlight will do the last question and then we'll move on, so I don't have to pause the video again to explain something. It's early Sunday, guys. Don't hate me. My brain is working a little slow this morning. I'm having to pause and unpause and pause and unpause. Trend seems to be able to hold the move. Overestimating my exit at 55.3 on a short from 69. Well, that's a crazy short, Starlight, but you're a crazy trader, to be fair. This trend is a piece of the architecture that could have held it. Trends seem to be able to held that move. This trend here, yeah. Well, it broke from one trend and went straight to the next. It was yeah.
This hold level, which we know, this is what happens. This is what happened at that point. This resets.
I think this is a lesson a lot of people are going to rewatch. This is a pretty important lesson that
resets itself and goes.
This little bit of talk that we've done is like,
this is now a different
crucial.
Part of the move. This is now giving you your
stuff we talked about today is like
controlling the
beyond important
of all of this. So this is the polarized point that controls the entirety.
I have a feeling this is going to be the most watched
replay
replay
of the month. You hit this final low that gives you your final hold level right here, which controls the entire segment of the leg, because the viscosity counter resets, because technically it's a new trend. It's a new.
Just gonna make one remark about that trend. I believe this is daily to daily, right? I believe this is daily to daily. Yeah, this is daily to daily. So this is kind of expected, where you'd hit trend and you'd go and break it, and because you do need to close under that trend on a daily, or at least 1 degree of separation, at least starting on the 4 hour. And when you don't hard close that 4 hour, when you close it in accumulation, you can expect to move up, and then you regain it and you're ripping up since then. So like yeah. When you're talking about this move here, it's like, okay, well, identifying what created that trend is kind of first and foremost. Like, it's a daily to daily, pretty big. The 1 degree of separation would even work well here to say like, okay, well, you didn't hard close. If you hard closed it, I could see you staying in the trade and just being like, okay, let's see what happens. But when you attempt to break it and you start to close an accumulation like that, you just gotta simply do this and be like, okay, if this doesn't break, I am out of here, right? Like if you don't break this like little, probably like 15 to 15 or something here, you just whatever's local to the move. Like if you don't, it tried to break on the daily, which is 1 degree of separation to the 4 hour. So you can use the 1 hour trend here, 1 more degree of separation there. So if you create this and you don't break it, it's like, oh no. Or even this right here, and you don't break it, it's like, oh no. So yeah,
new trend that's going to have its own viscosity counter.
Honestly, it takes me 2 watches. Today's a pretty important lesson.
It continues to move up like this, and then this.
Not a lot of words,
once
but
and creates it off its next hold level, and then has its own little hold level
like
here,
critical information, like damning critical information
here, and it breaks that trend again. Like you're basically attacking this part of the move. You've already hit your final hold level, which creates your final low, which creates your actual final hold level. Because once this breaks, then the whole thing is collapsed, right? Because you're starting that laddering process all over again. So it becomes a moment of polarity as to where you see the viscosity in this move can just completely pull this thing back and destroy the move. So this is a really in-depth look at how we look at exterior trends, right? So this is the way in which trends control the market, right? Because levels become points where we buy, and trends become points where price gets injected. Now that could be up or down, but trends are injection points, right? They're even if you were to just simply draw a trend from here to here, I guess you'd have to start at the top here. Start at the top here, draw this here, right? Accumulation to accumulation. That breaks up there, gives you this here, which has its own microcycle right here. And even like your little local interior trends, they all have the same thing where you have a hold level breaks through trend and blah, 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 right? And so forth. The move gets injected and even every parts of this have that, right? Like every single part, you'd have this from here to here, which would be accumulation to accumulation, hard closes to here. And then, even inside of this move, that means you would have had this to this, right? So that's fine. This exists everywhere. Or even like back here where you have this here to this here, right? Like it's just these local trends that dictate the pieces of the move, right? And then even here to here, right? That breaks up, making this the trend from here to here, right? Gives you that piece, and so forth and so forth. Like the trends, they exist everywhere. They become injection points, right? But this is an important part of the chart to understand when we start to work with trends. And this is like a good way to look at exterior trend, but you have to understand this to understand how interior trends work. Okay, so interior trends are something completely different. Interior trends are what dictates. How is the best way to say this? Exterior moments are dictated by interior events. So exterior moments are moments of polarity, and moments of polarity are dictated by the interior moments.
Oh, sorry, I had my mic muted. I was coughing. What I was saying is that the exterior. That's funny. Nice one, MD. So what I was saying is this is important, and I'm going to write this in chat. Okay. What I was saying in this is exterior and interior polarity, very much what we've been talking about today. So the interior is like a bunch of ants, and the ants, they all work together to carry the chocolate bar, or the cookie, or whatever ants carry. Chocolate bars, if somebody drops a cookie on the ground, they work together to get it back home. That's like the final moment. All the ants are like the interior moments. These are all the interior moments attack the exterior event. So polarity happens on two spectrums. There's exterior polarity, where this is obviously like meta changing polarity. This changes the meta of the markets, right? So that's like meta changing polarity, and that is created. Those attacks are created on the interior. So here, let's I see that unmuting. You guys kill me. So exterior polarity is attacked on interior moments. So this is kind of what we've been talking about today, and I'm going to pin this message. Exterior polarity is attacked on interior moments. So these attacks of higher time frames happen on the smaller interior moments before the attack. So before this happens, it's going to happen somewhere like here. It's just about finding that piece that breaks the move, like the final hold, the final this, those parts of the move. It's really important to realize that those moments are lost. Like, that famous clip of me where I said, create the 4 hour and let it dump. And then the bear market, and, we were in mentorship, and a lot of people were hearing that lesson. And, that was a pretty special day because I had called the bear market before it was happening, and then I said, this is the moment the bear market is going to happen. Create the 4 hour, let it dump. But there was a bunch of interior moments. We're doing very much that same thing right here, where we have the 1 hour backside. You could almost like apply that same thing. Let the 1 hour backside create and then let it dump, right? Like, we're trying to define future moments before they happen. And we can do that by understanding the smaller events inside. But realize that this would be exterior because it hasn't happened yet. And these are interior because they're in play, they're active. This is not an active moment. This is not an active support yet, but it can be, resistance. But this can become an active resistance. Right now, it would be like an active support, right? So just very, very crucial to realize what we're getting into here. And I want people to review this weekend's lessons as much as they can before they come down at the end of the month, because they're not staying till next month. That's going to be changing. I want people to have the replays faster. So instead of putting them available at the beginning of the following month, I'm making them available during the month that they're active, because I don't want people to have to wait that long. I feel like it'll be better for learning to have the replays available sooner. We go over something and it's available then, right? Like that weekend, I make it available for replay for the month and not for the next month. So I'm just changing that a little bit. So that is really important to understand. What we're talking about here is we're getting into a different part of butterfly effect. We're getting into a different part of charting. We're getting into more advanced stuff. So it's going to be critical to study what we talked about this weekend. This weekend was a big shift in what we normally do in the charts. This weekend was a very different defining type of moment for a lot of people. Realized or not. You just scroll down. Chocolate Cocoa. The replays are just under the page you're on right now. Just scroll down and you'll see the replays from this month. So under your live replayer that you're watching right now, just scroll down and you'll see replays. Yes, there you go. You'll see them. They're only up until the end of the month. So make sure you study the heck out of them, all videos, because that's all of this month's content. Again, we're getting into a more advanced component of butterfly effect now. So it's really critical to understand this stuff right now.
So let me say that again, because it's a little bit of a tongue twister.
You're welcome.
Exterior moments create polarity, and interior moments test polarity, right? So interior moments make the decisions at polarity, and exterior moments create that polarity.
So Starlight, they'll be on
This is a
till
like
the
I was
end of
saying
the
before,
month.
this is a good overview
So for more
of
than a
how
week.
we have
From
started
right
doing
now,
trends,
yes.
because trends go very deep, and we've got
I'll just
quite a
take
few
them down
lessons
on like the
trends.
29th and 30th.
Just as with hold levels, having a very deep breadth of information, very much past what you would expect at a surface level.
What I'll likely do, don't worry, Starlight. What I'll likely do is just have 2 replays up at a time. So I'll probably just like leave every replay up for 10 days or like 7 days or something. That way people have like the week after to review it. And I'll just have them, I'm going to start putting them up on Sundays instead of once a month. I'll just put like today's will go up today and it'll be left. And then next month, the first lesson will be on the 4th, and that'll stay up to like the 11th or something like that. I just think it makes a little more sense instead of people delaying. Like I think it's if you know they're only available for a week and you just studied it, I'd rather people have the material that we just went over, take that week to study it instead of once a month going and be like, okay, let's just redo the whole thing. I think that just creates kind of a bad study pattern, bad study habits. Too much at once is overload. Like last month we had 7 lessons. There was something like 20 hours of content that people were jamming in a week. I feel like it's better to just, here's one lesson, you have a week, study it, get it down so we can move on. I feel like that's better, unless you guys think otherwise, but I'm pretty confident that's going to be better than just like, oh, like last month was crazy. We had like 7 lessons or something. It was like 20 hours of content. There was like 4-hour lessons back to back to back to back. Like it was stupid. Even though I was off for a week, it ended up being the biggest content month there was. So like, I just don't feel like that's like conducive to learning. Good workflow. I agree. Yeah. Okay, good. Glad you guys agree, because I'd like to do that instead anyways.
Trends do this as well. So trends have a lot of different rules and functionality that they have. This is the way we look at it. And again, we just, to kind of recap, we go back to, we have simply looked at exterior trends here in this whole area. We've simply looked at exterior trends. Interior will be next, right? Now we'll switch this over here because we're going to be on interior trends. What are we trying to create inside of all this? Has the final low been hit? No, then it can be hit. It's the greediest hold in the entirety of the move. When the final low has been hit, has the final hold been created? So that would be kind of the in-between moment. You have to find your final hold, and how much viscosity does it have is how you kind of rank your trend as time is going on. Okay. That's a good wrap up of exterior trends. Now, going back to what I was saying prior, exterior moments in our charts, so exterior trends, exterior levels, create moments of polarity. Polarity is spots in the chart where it's going to hit that for certain or for sure, and it is going to have a direct reaction straight up or straight down. This is polarity. This is how we know it's very black and white. It's a polarized moment, right? So this is polarity in our charts, or polarization, a polarized moment. This is created by exterior events. Interior events decide what happens at polarity. So exterior creates polarity, interior tests polarity. Okay, so exterior creates, interior tests. So just like exterior, we have interior parts of our move. So interior parts.
So when I was doing this lesson, I don't think people would have picked up on that. What I said, exterior creates, interior tests. That's the exact same thing we're talking about today. I just didn't go in depth on it then because it's just too much overload, too much. Like if you can't. So that's the same thing we're talking about today. Interior moments testing exterior polarity. So when I say that in the lesson, that in itself, that little statement there is a whole lesson in itself, which is obviously what we're doing right now. So that there's like a lot of missing pieces there, right? Like not on purpose, but it's just the way you have to teach it. Like there's 75 lessons in butterfly effect. How they I might as well make it 300 if I have to explain every single little thing. But there's a lot of moments in butterfly effect like that where the material, it just, one small saying opens a doorway into like 3 more lessons. So just, it is talked about actually in the lesson. What we're talking about now is just maybe not to the depth that you have to, but like, again, then what do you do? 300 lesson butterfly effect, it would never end. It might as well just be a continuing, evolving, market meta at that point. So it's just really critical to know that sometimes I say these small things in here and it's like, wow, But that's exactly what we're talking about. Interior moments test polarity exterior. There's interior polarity, there's exterior polarity. There's exterior moments that get tested by interior moments, and sometimes that's based on interior polarity, and sometimes that's based on interior and exterior polarity happening at the same time. Makes sense why everything begins as scalp and ends as scalp, meaning we begin in the internal using the external and end on the internal using the external. Yeah, and you know, it's really cool when you realize that, and then you understand that there's a moment that happens where you say, hey, everything's a scalp. Hey, this one has a potential to not be a scalp, and it cannot be, like, everything is a scalp. Think of it that way, and you're right. But then there's you see setups that happen, and you're like, oh, it's a scalp, it's a scalp, everything's a scalp, everything's a scalp, all of a sudden you're like, oh, wait a second, this next one might be a position trade or a swing trade. If only this happens, that could be a potential swing trade. Shit, this is a scalp, so we're still scalp. But sometimes 1 in every 10 scalps, hey, this has the potential to be a swing trade. Cool. If this breaks, it's no longer a scalp. Oh, we just broke the move. Oh, crap, this is no longer, we're in a swing trade. We're in the big money. And then it's like, oh, okay, great, you're in a swing trade. And then it's the same thing. It's like, oh, here's a swing trade here. Here's a swing trade here. Here's a swing trade here. And inside of those have all the like 10 little scalps. But then all of a sudden, one swing trade, the setup is correct. And you're like, oh my God, wait a second. This could be a position trade because it could go down here and it could attack this and it could go like that. Holy crap. So it's like the same theory, just repeats. So everything starts as a scalp should be everybody's home base bread and butter, because there is no difference between positions, swings, and scalps. The difference is identifying the setup of the current spectrum you're in. You know, 1 in every 10 scalps can have the ability to turn into a swing trade. 1 in every 10 swing trades has the ability to turn into a position trade. And so that's where people struggle with exits too. So this is critical to know as well. Very quick explanation, but and unbelievably deep implications. Like you could 10 more lessons on this, what I just said right now, because that's like an extremely deep set of implications. But that little statement there should really open people's eyes to exits. This is a big defining point for exits, as well as, I'm going to write this in chat. God damn it, Starlight. I'm kidding, completely kidding. It's a good question, but like, God damn it. Okay. 1 in 10 the scalps turn into swings, and 1 in 10 swings turn into position trades. And I'm going to put like a disclaimer, not exact. This is not saying it's not true. It's just saying, like, don't, for the love of God, please don't be like number 9. Okay, this is number 10. Oh my God, we've already gone through 9. This next one must be. Please don't, like, that's not what we mean when we say not exact. And I'm going to pin this. So, like, if you don't, swear to God, if you guys do that and I start seeing but 9 has already been scalps, you're done. Great question, Starlight, by the way. And I think, just you guys need to review this lesson. It's just there's too much information.
By definition, are just the
12
pieces
minutes
that can
TMI.
Independently live without any.
God, I love mentorship.
Fraction to it, or any fracture, any pieces prior, any when we look at these exterior trends, exterior levels, they're all sourced off of another event. Like a legacy event creates a global creates a local. So if you don't have a global, you can't have a local, because in order to have a local, you have to have it fractured from a global, which is fractured from a legacy. So you have to have these large overarching pieces of your chart. Hence the name legacy, global, local. Interior parts of the moves are completely independent and can exist anywhere you want. So like, for example, an interior trend would be like this to this, which would have its own little piece from here to here, possibly, which eventually ends up being down here, which eventually ends up being here. So even an interior moment can live right here, for example. So an interior moment, I would simply pin like this, right? An interior moment can have this trend right here, which ends up hitting a hold level down here, and so forth and so forth, and vice versa, right? It can have the same thing on the bottom side. So what we are going to do is, this is even 12 hours. So this is actually a truce to think that a 12 hour is an interior trend, but okay, fine, it can't be. We're going to go even more interior. You know, we're just going to pick kind of the middle of this and start here. So you can start by even, let's cut this off here. So we know what's going up. That's fine. We would expect that. You can even start by defining an interior trend like this, right? So we would just simply start here. We're just going to pick the very high of this move and kind of walk through. So you would start and define the interior moment there. So this is, interior moments can live independent of anything else, right? And so the greediest point in this move, this hold level back here is holding up this. So you'd be somewhere like here. So as long as this can hold, your move is going up. So you have these interior moments that you really don't have to have a defining base criteria. They can exist, and an interior moment can sometimes exist for 5 minutes at a time, or it can exist for a spread of 15-minute candles, right? So even if we were to go right here, and we're just going to cut this off here and maybe go to 1-minute candles or 3-minute candles, that's fine. We could even say that we would have criteria like this. This is trying to break here, which is creating this trend right here, which gives you that there, which is likely holding off of this backside right here, right? Backside right there is hit, which gives you your next point that needs to be held, which is right here. This test twice, that's fine. And then it gives you your next point here. So these are interior moments, right? Which gives you simply your next front side hold level right there, and so forth and so forth and so forth. Like it's all the same, right? And then so if we were to go back to the 15-minute charts, we just saw kind of like the interior piece of a trend. So that's fine. Interior moments, they can exist independent of anything else. And it's the same thing, kind of like a viscosity counter. Like if this thing is going to move up, how many times does it have to break, right? Like here's the first trend break, this right here, that's second trend break, this right here probably fans out to here on a higher time frame. So then I would just even cycle to a higher time frame and say, okay, fine, this broke here, and it created the swing there, which is probably just your first 15-minute trend. And so we hit play, and then you can see where. So you can see where this kind of final hold levels is almost like the same thing. Like you've created the hold here to whatever the level is here, front side here, and that's that same thing, right? Like that's that same. Okay, you've created trend. So once this trend breaks, you're likely going to have a move, and then it's going to happen. Stop trading view. Stop. Jesus, trading view is so slow. So then you're even going to have this right here, right? Like kind of this interior moment here. So this is kind of like your same local global legacy, where it is going to have that break there. Inside of this is going to have a local piece of the move that has to break right here, right? And so when that breaks, it starts to ladder here. So interior moments, they can exist at any moment in time, but they are just defined by the larger events. So you can see even here, trading view still not stopping. That's fine. Actually go after the greediest hold down here.
Goddamn trading view
So hit the same
it's not
hold
just
level.
me.
It's still laddering up
Thing
off
never
this,
works.
which is actually just long-term holding this right here, right? So it's just long-term holding that and trying to create a ladder off what it's already holding, right? So this is part of a bigger part of the charts, but this interior trend, all starting back from the beginning here, you have these interior trends and these moments that exist like this, where you don't have to have it attached to anything, because all you're doing is testing the binds of what it is testing. So we're going to go into a live example and look at that on the charts today, and you can see where it does break this trend and create its ladder up, right? Like it's going to create its move up off this. So you notice that we didn't attach this trend here to anything. This trend back here, it didn't attach to anything. We just created it independent of all restrictions from the top, just to simply see what it's doing here. So if we want to say, oh, we have to go over top of this, well, we need to create an interior trend that's going to have another fan out point here, right? This probably didn't break on a higher time frame, right? Like a 15-minute or an hourly, you're starting to develop more of the chart. You can start to go into your fractal nature in this chart and start to work through those things. You can simply see that this isn't encumbered by anything else. This doesn't have a moment that it's saying, oh, there's an overarching piece here. We can't attach this right here, simply for the reason that it's not being touched by another trend. Well, interior trends, it's the beauty of them. They can be created in any moment in time, and they can exist anywhere, right? So,
hey, this is Dwight Powell.
Okay, welcome to a quick few-minute break, and we'll get on to the next one.
Fan out to here. This, which I'm assuming just didn't have the breakout in the future in the right time frame. It just didn't hard close on a relevant enough time frame. So it's just creating kind of a downtrend here, right? Maybe let's switch time frames to an hourly here. You can see that's that moment where that interior trend breaks, right? Like you can see, so how we created that, it probably simply just didn't close on a big enough time frame. Like this hard close here probably simply didn't happen on the 4-hour or some time frame, right? Like you can see it, yeah, the 4-hour time frame, right? So you can see where it didn't hard close. But then if you go into this move, you can see this interior trend was completely unencumbered by all the larger trends. It's just simply an interior moment to decide if this trend here, it's just simply an interior moment where this trend here is existent without infraction of the larger events, right? Like it's not fractured off of bigger pieces. It's not a smaller piece of a larger piece. Rather, it is simply just, and what we're going to do since we can't see what's going on here, rather, it is just its own independent piece. Just like up here, you would have a fracturing like this, right? And so fine, you could say this is your larger trend, but what's going to dictate breaking that larger trend is a more interior trend. So we're on a 15-minute chart here. So you could simply do something like this on a smaller time frame. I'm assuming this is the swing high, which it is, and you are going to have a hold level, something in this range here. Like I'm not quite sure. Maybe it's this one. I'm not sure. This looks kind of like it would be the start of this valley here, something like that. Really not important there, because actually it could even come down to this breach down here and hit that before it breaches back up. But this is completely independent of anything else. We don't even need this one here to know that that's the point. We could simply put that there and say the hold level is here. So this is going to be hit. Oops, the hold level here is going to hold the move down and create a microcycle, right? So and that hold level's hit, which actually gives you your next trend right here. Come on, right here to here, completely unencumbered by anything else. So what we're actually going to do is we're going to leave this hold, put that trend back because we know it's there, and this is just like a larger piece, right? This is completely unencumbered by anything else. Simply has a large enough time frame ladder, right? Create this from here to here. When you break over this, I'm assuming you're going to have your move up, because you have to think about, okay, the same questions we asked before. How much viscosity does the move have, right? Because on the bottom side of this, look what's happening. You have distribution to distribution. So on the top, you have, okay, we've broken 1, 2, 3. The viscosity of this trend is getting rather low. You have broken this and adapted it to here, right? And you have a trend. So this is actually also broken 2 times, and this is broken 3 times on top. So you have, and I would even wonder if this has really broken. So actually the trend is from here to right here on a larger time frame, which we can say on an even larger time frame, it's actually probably to this low right here. This is just like experience. So I mean, this is probably going to line up on the hourly nicely. Yep. So that's the point right there. So that's just, my own experience that I know how to do that. Chart without charting kind of thing. So simply you're here to here, which gives you your trend. And this trend hasn't really been broken, but like this on a larger time frame, I can tell this is broken just because of the sharpness of the way it's fallen. So I don't have to work through time frames to see this is broken once, twice, and about to break 3 times. So really all we're doing is testing the viscosity of this upper trend, which is the viscosity of the larger trend, the local testing, the global, and so forth to have a larger move. But really what you're being shown here is that you don't have to have a fracturing to see this point. This is simply an interior moment that's testing an exterior moment. So the fracturing here is the exterior moment locally, which is still an interior moment on its own. But inside of this small piece right here, this is local and global, right? And that's fine. All interior, all very local, all irrelevant, all destroyed once we just move over top of it. It's something that can live for 1 minute. It can live for 5 minutes. It can live for, if you're using 1 second candles, it can live for 1 minute. If you're using 5 minute candles, it can live for 3 hours. But it's completely unencumbered. That's the most important piece to understand here. Is it's completely unencumbered from everything else. So still ask yourself the same questions. How much viscosity does it have? Because simply look what you're doing here. You have a base that's breaking over an origin point here. Back test the origin. You create your 1, 2, 3, 4, so forth and so forth. So you're creating a ladder, and really it can.
So that's pretty cool. You see an origin point and a ladder with the origin point there.
Actually goes.
Oops. You see a ladder and an origin point, and back testing this origin. Once you break this ladder, the back test of the origin, as we've discussed in the past few weeks, that back test of that origin is going to be a pretty important moment. So just another micro example of polarity.
To its final low, which is right here, which will create its own final hold on top of this origin, right? So then you come here and you see if it's going to break over, and maybe we'll do a 5-minute chart here. I think a 5-minute chart's a little more relevant to do, so we can see how the trend is working, right? And this is the great thing about interior trends. Again, they're completely unencumbered. So I would assume if this is hard closing now, it's probably going to have a rather large move, and it does. It actually goes right to its trend, which is perfect. Like it's actually absolutely perfect. Interior moment that's deciding the future, right? You haven't hard closed it yet, and there's the hard close there. So, and I would even wonder if that's time frame relevant here on the 15-minute. You actually didn't hard close it. You actually do have the move up, because again, the viscosity of this upper interior moment is reducing as this trend on the bottom is continuing to hold, right? So we're on the 15-minute time frame, and we never have actually hard closed a 15-minute trend here. Rather, all we've done is broken 1, 2, 3 trends here, testing the upper range of this. So then, you have this moment of polarity where it's like, okay, well, clearly we can see what's happening, right? We can clearly see that this interior moment is breaking, right? You can go to a larger time frame here and you can see, okay, well, it actually hasn't technically hard closed. So what is it trying to do? Well, most likely it's trying to hold the level from back here, which is going to be somewhat closer on your interior chart, which would be this kind of, where's the final hold? Let's see, is this the final hold? So let's go here and we'll see. I haven't done this. This is too new. I haven't charted anything today, so I'm kind of just walking through this with the moment right now. So this is tested. So we're going to delete it. We know it's tested. We know this low has been tested here. Okay, that creates this here, which has been tested. So I don't think there's anything inside of this range that's untested. I can go here. This does definitely look like all of this range is tested. We can go here. This isn't tested, so this is tested. So this is kind of like this moment here to the final low here. So has the final low been hit? If it has, then we can create our final hold, right? It actually does get hit right there in a big way. Let's just play this out here first. And that can create our final hold of the move, right? So this can create kind of like our final hold inside of this move. So we can actually move this over and give us our final hold level. So once this breaks here, which is this here, and this is actually just holding the backside. Select that, put the backside here. So this is actually just holding the backside of a move. And I wonder if there's something even larger time frame here. So right here, yeah, it's actually just holding the backside of the move. So this is a different type of level, and that's fine. We haven't gone over that, which is creating the final hold in the move, which is kind of controlling the collapse of this move down into the smaller ranges. But again, this is beautiful because this is an interior moment that if we leave all our interior information on our charts, we simply have, and then this is broken and this is no longer good, and so we have the final level, which gives us our final hold, and this is tested. That's tested. So you simply have, this is the unencumbered level here, and the greediest point kind of here. But we're just going to leave that because it's not really important. But I think you guys and girls can do that on your own. But you can see the final moments of, like, I'm assuming here, if we go here and go to 1 minute charts, you can see where this is trying to capture that interior moment, right? You can see where it's trying to capture that interior moment. And once it does, you've got a grouping of candles here that's trying to get over this moment. Once it does, the next hour hard close, I'm assuming, is going to have rather large move up, which it does, because you're hard closing an interior moment. And that's kind of dictating this upper range here and saying, okay, here's the greediest untested leg. And you probably have something even in this range here as the final low. So now we can even go to our interior moment and say, okay, where's the final low? So what we actually want to do now is we can get rid of this, because we're just doing the same thing on the top side, right? We're just doing the same thing, and we can say, okay, so that's the base of the candle. So there could be something in here. That's very close to being tested. I'd actually like to see deeper time frames. That's tested. This is tested right here. This is kind of a final tested level. So really, you should actually already be breaking this move. Is there something else we're not seeing? Not really. Like, you basically have to hold this hold level right here, or the move is broken. I mean, we can go and see if there's something inside of this right here. This is like, it's not technically tested, but I guess this is like the final moment. Once this breaks, it's completely polarized. Let's see what happens. I'm just going to go to a 4-hour chart and hit play here. Let this move catch up a bit. We do break over the local level. Okay, we definitely went too far here. 72.91. Yeah, this is like 72.91 is like, I wouldn't even try. I don't know if I would trust this level, because it's just like, it's kind of already, everything's already tested. So, why this thing breaks up. Yeah, I mean, it makes complete sense. Like, your last untested level here, don't even have one, because this is tested. This is tested there. So you have like this right here. 72.46 is untested. Like, this is kind of like your only untested level, because like, this is tested. You can see that's clear. So this is not going to hold the move. This has already been tested. That's not going to hold the move. This has already been tested. That's not going to hold the move. You either have something in here, and those are all tested there. So I'm looking right here and saying, okay, well, this can create the final low of the move. So if this goes, the move is gone. So I think that's it. That's it right there. So that has to create the final low. Get a fan out from here. Now we can delete those. That's fine. If it's not going to pick the right point for us, we'll just delete the ones that it doesn't. Nope, another one gone. Let's try one more time. Nope, another one gone. That's fine. I'm sure there's a better way I could have done that. So
whenever you see breakouts like this, I think it's important to find the point of polarity and mark it as support in the future. I think that's a pretty good example of the origin point that broke, or whatever broke the move, also can act as the support, which is cool. I really like that.
So that would have created the final low right there. And if this is lost, the move is collapsing, right? So we can go here and see what happens on this here, because it's just simply the final level that's untested, right? Like it's going to create the final low of the move. Yeah, so you can see that it does have a pullback. It's only a few dollars away and has a pullback, and probably just holds its own interior range, right? Like I would assume that you have this to this breaks once, and it actually just breaks right over top of the level. And actually at this point, you're just looking at trends like this and saying, breaks this, have a small move up, forget small, Jesus. But it makes sense why it breaks, right? Like why it takes such a ridiculous move up, because it created, again, we just go back to what we talked about with defining trends. And we can flip this and we can say, like, the only untested level creates the final low, which will create the final hold, and it just completely loses it. So this is, of course, it's going to slip through the world here because it's a moment of polarity, right? Like look at how crazy it goes. It just slips right through to the next range. Like it just completely breaks its range and goes right to the next range, because at that point, like all of this stuff was even tested in here. Even these larger pieces that like I'm certain that this stuff would have all been tested. Like right here, that's tested. You go deeper into the range. Is this tested here? That's tested. Is this tested? No, but this is also, the range is already being, like, are you going to go 72.94 and then stop at 73.43? I suppose it's possible. We can see if the greediest part of the range here was respected at all, if it just slipped right through and it wasn't even respected. But I mean, to be fair, it makes sense because, even here, you go to this 4-hour level and the range is being tested. So this range from the bottom of this to the top of this is being tested based on this trend. But really the key moment is understanding where that trend interaction is. So, you can even go to the hourly, say like, okay, well, the range exists from the backside here to the front side here. So the front side is tested, the backside is tested. You have like a greedy micro level, but if you have a backside already tested and a front side already tested here, it's like, okay, well, yeah, don't be shocked when this doesn't hold the move. Like, don't be shocked when your interior trends break, your final low gets created. You don't have anything left. Your trend is broken there, and then you would go back into your legacy trends, which are even interior to this moment, and you would say, okay, so fine, you have like this to this right here. I think we need to use a 4-hour time frame, not a one here. I think we need to use the actual proper time frames. So accumulation, sorry, this is the top. So that should be to accumulation. Yes, of course. So to the accumulation candle, and fine, you have your first trend. So viscosity is high. This goes here. Viscosity is medium high. Viscosity is kind of medium low, right? Like we're going to move these trends properly. Accumulation to accumulation. Actually, I would like to see maybe if this is the daily high. I think I'd have to actually do a little bit more work here. I think this is the daily. Yeah, so daily points, that's fine. Viscosity of the move, right? What's creating the final low, which is you've got your moment right here, and so you've got like a more of a we're going to delete this here. We're going to keep that there. We're going to delete this one here. We don't need that one anymore. We don't need these interior trends because we've already kind of gone over these. And then even this should be like this, right? You don't even have like, there was another one in there. Okay. We can even like viscosity high, high medium, medium or medium low. And as this is fanning out, like this is the final hold because all this stuff in here is tested. Like, look, this is tested here. Sure, that's tested in this range. This is kind of like the final range to be tested, which creates its own independent little part of the move here, which is backside is tested here, front side is tested here. So this is kind of the final low creates the final hold in the move, right? So then we go here, and I believe this was the tested level, right? So Yeah, we can just leave that range there for now. Let's see. Let's take a look. 4-hour candle. And even here would be like your 4-hour greedy point. This was tested here. Is this backside tested? 72.42.
So this looks like a pretty nice example as well as what we talked about earlier, where you have an interior moment that's, let's rewind this for a second here, get that last picture, where you do have other levels left in the move, right? Like you do have different points that you could go after here. Like you could, find the ladder points in here, and you could go after trend. You could go after this level, deep dive trend. There's a lot that you could do here, but I think the challenge here would be finding the interior moment that breaks the entire exterior component of the move. So I think that's a good challenge people should be doing this week, is whenever you're looking at trades, look for the interior moment that breaks the exterior component or the exterior part of the move that will show you how the gap exists or where it goes to in the next level. Almost identical to what we had seen. I believe it was a 4-hour trend. Boy, my trading view is still pretty laggy. I believe it was daily from here, hard closes to here gives you, I believe it was this one here. And like this, I believe it was this one. This is the trend that you have daily to daily, and understanding what it would attack in that moment, because you do have an untested level here, and it might have caused a bounce here, but more importantly, and you have this level here, it's reversed, but then you have the body of this, which is the actual level it's going after. Do you guys understand why it would have went after this next without me doing anything else on the screen? Like, why stop here? Because this kind of ties back to everything we talked about today. Like, why stop here? Give you guys a minute to answer that. I want to keep the talking to a minimum and the teaching down to a minimum for this last lesson, because it is 30 minutes and we talked about a lot of the important stuff here. But already, I think now is time to just do examples. So, like, why stop here? Why not the higher range up here? Why not this? Why stop there? And also the next part of that question is like, why not this? And also why this? So two parts, like why not this, but why this instead? Get rid of all this stuff here. You don't need any of this stuff. This is just example based. We can get that off the charts. We don't need that going forward. The time frames are relevant. Don't pay any attention to that. I'm using a 12 hours just to split the charts a bit easier here for this example. And I didn't want to go quite down to the 12 because we ladder down. Not good enough. Laddering down is something that happens regardless. Laddering up and down always happens. You can't say the trade happens because we're laddering. It's not good enough. Trend break provides fuel, skips ranges. I'll change the time frame for you guys, see if that helps. Go to the daily. Up here real quick. Go to the 4. We can go back to the 12. You can see it on the 12. You don't need to split time frames here to see it, but the 12 just gives you a little bit lower scope than the daily without having all the mess of the 4. You can see it on the 12. External price holding up the range. Final low of that tested valley. All good answers. I'm missing the exterior component of the chart. Backside holds up the move, right? Backside of this chart can hold up the move, or what can be the daily hold level right here, right? So this test right here encompasses everything from the 4-hour backside to the test of the daily here. Might not get to the greediest point of the daily, but it can go to the daily right here, which is the backside 4-hour, I'm assuming. You don't have to really even see this too much to know that this is going to be the backside 4-hour. That's that point of polarity. So remember how back when we said the origin level will cause the breakout of the move, right? If the origin level causes the breakout of the move, then we know that it's going to go after a backside in the future. So it has to continuously hold these backsides, and you diminish your trail all the way up to here. Here's your 4-hour backside that's being tested. Once that breaks, skip to your larger time frame and start finding the final hold after that test. So if that's a 4-hour backside, where would the daily front side or the ladder point of that range exist, right? And why it didn't stop, because it broke the 4-hour backside, right? Just same thing we looked at today. Origin point, just like here, origin point breakout, 4-hour backside, 4-hour backside here. Once this one breaks, you're going to gap down to the larger time frame. Got the 12-hour right there, right? This is a case where the 12-hour can be used, or the greedy level inside of this range. You could get into that. You could get into the 4-hour front side. Yeah, okay, so there'll be like 15-minute backsides, hourly front sides. The key here, though, is not finding this level, because this level can be found. The key here is understanding that this is going to break the entire move. That's the key to this. 4-hour backside here breaks the move just like it established down here. So you have the 4-hour continuing ladder points establishing. 4-hour breaks, moves down to the higher piece. And it's also why it doesn't stop right here. So that's why this breaks right here. That's why this break attacks a much lower part of the move. Now you can go from anywhere from here. You can delete some of this stuff. Actually, let's clean this chart up. It's getting a little messy here. Come on. Don't need any of this stuff here. The key was in understanding what had established the move up. This 4-hour origin point needed to create the same thing up here, right? Wondering if you have a 4-hour backside here. Oh no, that's right. It was trend, of course. Why am I looking for level? It's already on my screen. It's trend, of course. It's going to go test the range trend. Very simple. What the hell am I even looking for? Jesus. What are you looking for daily levels for? But anyways, 4-hour backside establishes this has to hold. It creates its origin breakout point off the hold on the 4-hour, right? That 4-hour has to hold because it's what establishes the move, right? There's your 4-hour backside right there. There's your 4-hour backside attempting to hold. It goes after the front side of it as well, right? Front side here, which is also this test right here, goes after the front side. Backside closes. It's going after the next part of the move that can hold it up. Is there a daily level? Oh, that's tested. Down here or trend. So that's the same thing that would happen. Your higher component piece would be being attacked based on an interior moment. So hopefully that makes sense. Could have actually went after this too. You could have actually went all the way down to here and went after this. I would just look for the daily levels here. 4-hour breaks, you're just moving to the daily. Trend is also the same thing as a daily here, as it's higher control and components of the chart, rather than the 4-hour backside being what 4-hour backside move down in theory. It's daily or trend, right? Range, trend, daily, they're all over encompassing of that same thing. It's all shown to you right here. 4-hour backside holds, right? Then you're just trailing up. This backside's here, this backside's here. Once you break that down, and I'm sure you have your other pieces up here that are showing you different things as well. Breakout failure on the origin or the 15-minute creating reverse. It fails breakout. Yeah.
Even here would be like your 4-hour greedy point. This was tested here. Is this backside tested? 72.42.
Nice. It's interesting to see because you're looking at almost the same thing here happening, as to where you likely had whatever had been propping this move up was also the piece that broke it. Like if it was a trend, for example, if you were going to say like, oh, you've broken trend and it goes to the next trend, like that would be the same thing. A local attacks a global, right? Like it's a very simple example that resonates the same theory. Local breaks, it attacks the global. It's the same thing. In this case, where you have a local trend inside the range, it attacks the global trend inside the range. It's just like a time frame attacking another time frame, or when you see cycles back in FOT where you have a trend and it goes and attacks the next trend. So one trend attacks the higher trend, or one time frame attacks a higher time frame to offset that.
So that's the value there. So backside's tested there. Is the front side tested? The final
yes, exactly, Starlight. So when you lose that interior trend, that's exactly what you see.
And actually, I would assume the final hold is here, because that.
In this case, it's such a big move because not only did you lose that 4-hour backside, but you lost that trend as well. So you don't really have anything left, as to where if you lost the trend, you may create a cycle, right? Like if you just have your interior trend that would have been from here to here, right? Like you just have this interior trend, you may create a cycle, and then you may stop somewhere on a ladder point because there was the 4-hour backside was established there. So you may break the trend, the interior trend, go after the 4-hour backside or a daily front, like whatever's next in queue, right? Like whatever's next in line. based on what the architecture shows you. But in this case, that 4 hour broke here, that trend broke, and that 4 hour was already tested. So it just rips right through everything, right? Just completely goes through everything, which it should.
Final trend creates that final hold. So your final hold is going to be inside of this range here somewhere. So what we're going to do is put this here and work downwards to see where the actual level is, which is right there. You could go greedy and be right here, I suppose, like something in this range here. Right there, I would say. It actually does hit the greediest point. Right here, this has been already tested, right? So it can't be this. Could it be this? Oh boy. That would be tough. It's going to be one of these front sides, because backside, front side, like you have backside here, backside is tested, front side is not. Backside is tested, front side is not. So trend is the delimiting factor here, right? You lose trend, you lose this level, it breaks below trend. I'm assuming this is a hard close above this trend, right? Let's flip the chart back over. Hard close that trend, move is gone, right? Polarity. And then it's up 6-7%. So even this would have been like a great trade, just to say like, oh yes, of course, look, this is your final hold level, there's your final trend. And so completes the picture of part of the move. And even right now in this move, as we sit right now, I'm not really sure where we are in this move, but even now I would go like this and I would say, okay, your first trend is here. This is an interior trend. Let's maybe even do it on a 3-minute chart. Your first trend is there. Your next interior trend is here. And this is the beauty. They're not encumbered by exterior events. You can create them to exist for 5 minutes at a time and just delete them. Are we current in the move here? No, we're not. So let's see what happens. You know, you would not expect to get over top of this, but this hold level's already been hit. So possibly this one, that's been hit. So possibly, you know, something in here and that's been hit. I would simply just say this right here. We would just simply go back to this one to say, okay, final moment in the move. And you could probably, even as long as you're laddering off this high point here, it's fine. It actually does get hit. Perfect. Which actually gives us our first swing against what could be a larger piece of the move here, right? Because now we have interior trends are completely unencumbered by anything, right? So you can see how that trend gets followed, likely to this here. Trend breaks up. I'd actually like to see what the 5-minute looks like. So then you have that there against this right here. But you can see the bottom side trend that's being lost, like base of the mover here. You can see, I guess we leave it where it was because that seems like it was accurate. So that's, you know, your first trend. I think this is going to be a little awkward to do on this time frame. So I'm just going to put it here. So this is kind of like first trend is lost there. Here's the low of this trend. Second trend is about to be lost here. So you can see how like the viscosity is already getting affected against the exact same cycle that we just created. Now, whether this is the final part of the move or not, you know, we simply go back into here. Our range exists somewhere from the top of this to the bottom of this. So like you've got some range in there. So then you're just really range finding, like you're doing what's called range hunting, right? So then your range becomes something like this to this, right? Like that's your range. We had this marked here, but you know, really your range exists here somewhere. So we can just widen this out to kind of find the smarter levels. You've got the 4-hour backside right here. You can go deeper into this, start to find backside, front side combination levels. You know, so then you'd have something like this, 7802, 7806 or 7 or something like this. This would be kind of like the front side level. You got backside there, front side there, greediest point here. That's the top of the move there. So this is kind of like the beginning of the greedy point. Start of it. Right? You've got some kind of front side, backside combination right there, which just starts the whole process over with trends. Go inside here and find it. Possibly right there. That's still the backside. Could have backside, front side combination right here. So backside, front side, front side. So the first red is backside, second red is backside, front side. Oops, I don't want to move that. I would have expected to hit some greedy level. So yeah, that's exactly what it hits. The backside, front side combination level. So greedier than this backside, because I just don't think this backside is high enough. I think when you look at this candle here and you see what the range looks like, and really you can kind of use these body points as the, you know, there's some type of greedy level there. I think this is way too low. And I think this is way too high. So you have to start to find the delimiting levels between, right? Like the balance between greedy and not. And then it's a chart architecture in the moment. Like, what is it breaking to get to where, right? Yeah, just go straight after that level. So really either of these two levels would have been actually quite okay. 77.20 or this one, 77.57. So you actually have the backside or the front side here. Now, whether you have the front side and you got super greedy, maybe you front rounded a bit and caught that knife. Actually, it looks like the backside is hit and it just has a little bit of a bleed over because, oh, that's trend. Sorry. No, so that's not even a level. It's actually just looks like this 77.58 level just got front round a bit. Wondering if we're.
So I'm going to make a comment on polarity here. I like your picture here, MD. Polarity is something that when you first start learning about polarity, it feels like this jungle. This is what it feels like. I gotta just like try to reload my trading view here. Like this thing is so slow. Is it better? Okay, that's a little better. It's still a little kind of wonky, but okay. Let's talk about polarity for a second. When you first learn polarity, it's like this. You have hold levels, right? Like you have a hold level here, and this has its own point of polarity. And then a trend has a polarity. This is a trend, right? T for trend. And this is an interior trend, IT, and it has its own point of polarity. And this is like an exterior trend, ET. And then there's interior trends inside of this, which is, another point of polarity. And there's all of these things. There's hold levels, there's hourlies, there's time frames, there's all of these different things where everything can have a point of polarity. So sometimes it feels like weeding through a jungle and you're not really sure, well, which one is the right one to use? It's, polarity is everywhere. It happens, and this is true. This is not false. This is not an overestimation. Polarity can happen everywhere. As you get better, what happens is this. You start saying that you be able to recognize it very fast. You say, okay, those ones can't be polarity. These ones can't be polarity. That can't be polarity. So this is actually polarity. So while it may feel like, and it's a bit of a journey, you're right. I think that's key in what that, you made me realize what you're saying. Like the thing I would point out is that you're right. It is a long journey to get to polarity, but to not look at it in a way that you have all of these different things and you're trying to identify the polarity in every scenario independently. Rather, what you're trying to do, and over time, what you'll get good at is you'll see a chart like this and you'll be like, okay, there's the point of polarity right here. And you'll be able to like pick it out really fast. And you'll say, oh, if that polarity hits, it's going to create this. So you'll be able to see like 3 and 4 things into the future, kind of in a way. You'll be able to say, like I do that all the time. I'm like, oh, okay, well, if it does this up here, and then it's going to do this down here, and then it's going to hit this level, and then it's going to create a trend like this, and then you're going to have this, and it's going to go up and attack that, which creates a point of polarity here. So your polarity will be here in the future 4 moments ahead. You'll be really good at identifying where the polarity exists, because it would be correct to say that polarity can exist across everything. So it would almost be confusing. Like there's points of polarity all over the chart, but only the important one matters. So over time, you'll get better at identifying which point of polarity is the one that you need to pay attention to, because they do exist everywhere. So that is not incorrect. However, the most important part of understanding polarity is finding out which one really represents what's important in the move. So that just comes with time and experience and learning more and deeper theories. But that's a good realization to have from the start, is that you're not supposed to be, polarity is, again, think of the valley of disappointment. Polarity is something that we need to just constantly hammer into our brains and not sit here and try to, put every point of polarity on the chart and use every single one, because that would be wrong. Because then you're going to be like, well, these aren't polarity, and then you're going to get confused on what polarity means. But then polarity is so critical in the charts that you cannot make mistakes with polarity. So
We're missing anything in here.
Just something I would mention.
Usually when something doesn't line up, there's a level that you just simply moved over. So we're going to cheat here a little bit. I don't usually cheat on my charts, but we're just going to cheat here to find the level. So possibly this right here. I'm wondering if maybe this is like a higher time frame that we missed. Yeah, that could be a higher time frame here. Like it could be like the 6 hour. Let's go take a look. No, it's not that. So what did we miss here? 4 hour level. It's fine. So it's technically it should be in this candle here. Really seems like we just mismarked the level. Was that what it hit? 77.35? Like, let's make sure this is right first before I go. Right. Yeah, that is the level, 77.35 there. It's just, what did we miss? So whatever this is that front run that? Yeah, so that looks like the level, but we just simply missed something. Like it's not rocket science here. It's just we simply missed something. Yeah, so there's a valley right there, backside, front side. So it was simply just a 15-minute level. That was one of the combinations. You've got the larger backside here. This is untested, 78.12, backside, front side right there, which actually ends up being taking this one over here into this range here. So somewhere like this. So you're kind of three levels: backside, front side combination, and then your actual front side. So the backside to the backside, front side, and then the front side of the level. So you have your three levels there. So I think we just simply didn't mark it properly. And that just gets what, front run by a few dollars. So the high of this was really not relevant for this lesson, but I do like to be exact. So 77.50, and this was 77.58. So that makes sense. People just front ran it to 77.50. It's very, very common. Or maybe on Binance, the levels hit differently. I think the levels hit differently because on my Binance charts, I have it marked at 78.02 and it hit it to the T. So there's some level in there that got hit on one exchange and just the other one.
Yeah, and I think that's a good strategy. MD, is to just use the greediest points, because if you only ever use the greediest points, your chance of failure rate is so low. Like if you start a journey and you're started, like you got to realize, you guys are going to be in this for a lifetime. If you're going to be serious about being day traders and make a career income, there's no rush to get to that finish line. There's no rush to make all that money right now, which you can. You can make the money now if you want. That's fine. But longevity is more important. So I think in a scenario where you've just outlined exactly what you just said, where you're saying, okay, greediest points, they're rarely going to hit, but when they do hit, I'm doing nothing but making money. And like every time Starlight takes a trade, I notice it's like the greediest, craziest positions. And there's like so much profits come out of it. It's like, holy crap, you're doing so well, Starlight. And like so many people are doing the same thing. It's like, if you just take the greediest positions and start your career there and add over time the different positions you can get into, like you're going to have longevity in the career. So I think that's like a really good strategy, what you're doing. Like just use the greediest points and give yourself time. Because again, the example of the valley of disappointment is so relevant for day trading that if you learn it, you can learn everything throughout all of butterfly effect and mentorship and all these things. And then go through that VOD, go through that valley of disappointment as you're learning without taking those positions. Just stick to one method that works. And it's like, okay, greediest levels, build my bank account, make good trades, positivity, don't get into a destructive cycle. And then over time, you're like, oh my God, these hold levels are working like all the time. And I remember when I had that breakthrough way back when, and I was like, oh my God, these hold levels are constantly working. I should just start taking these trades. And then I was nailing them like crazy. And then so you add that into your repertoire. And by just taking the greediest points all the time, it allows you to make money, continue your trading journey, and over time, start adding those things once you get comfortable with them. Greediest points on SHIB, 2-3% on 50x easy, I'm okay with. Exactly. And then like, okay, so what if you could build a career just on greediest points by scaling up? What if you got so good just at greediest points that you could always scale up? So what if your entire trading journey, what if you spent the next 10 years of your life only ever taking the greediest trades? But what you did do on top of that was you're like, oh, I'm in mentorship. I want to understand everything else. So I have a clearer picture of what my exits should look like on the greediest trades, on what can bring me to the greediest trades. And actually, you've just built your whole career in life off only to ever taking the greediest points. Like you could absolutely do that. And then when you get better and better, like master one thing, like master one part of the charts and just continuously do it over and over, and let all the other knowledge you learn just be more fuel to understanding better exits, how often greedy points happen, and really the only trades you ever take is greedy. Like you could build a whole entire career off this, and then you could just scale up as you get better and better and better at them. So there's nothing wrong with that either, because that's actually a pretty decent scenario too. Chocolate, the worst thing you can do is go for like strategies like that. And the best thing you can do is learn over time. And if you ask for strategy, it's like you could completely blow yourself out of the game. So like I don't disagree with saying like, oh, I'm not saying people shouldn't help you or you shouldn't learn how to do greediest levels, but just don't go too fast, because that's how you blow yourself out of these games, is you go too far ahead of yourselves and you don't understand. And then there's a really bad cycle that happens. So I'm not saying don't do it. And I'm not saying, people don't share with him. I'm saying proceed with caution for yourself. Everybody can share that stuff with you. Absolutely no problem. That's great. Sharing is caring. And that's a great way we can learn together as a community. And especially someone like Chocolate Coco, who's new, I would just say, personal words of wisdom for you, Chocolate Coco, is just to be very careful, because if you're going too fast, too far, too quickly, and like everybody here will agree, because they've all had those moments, you go too fast and it's like mistakes will happen. But the problem with mistakes is they cost money in this game. It's not like a video game where it's, oh, you just died and lost a round. Next round you can make it up. No, that's money you've lost forever, right? So it's like, be careful. Words of wisdom. Proceed cautiously, learn it, but like hyper learn it, over learn it. You know what I mean? It's why back in the day on Twitch, I would only ever take the greediest entries, because like, what's the point of ever taking anything else? Like, they're just like free money all the time, constantly just free money, just like every single day, free money. Only taking the greediest points while I'm in the learning process. Good for me, because I'm able to get monthly expenses out of it, able to focus 100% on this as a profession. Exactly. And there's no rush. There's no rush to force being able to take every position on the charts. We're learning how to take different types of positions, because there's many different positions. You could become a millionaire just off taking the right greedy level. You could become a millionaire off of taking one trend breakout with the right leverage. Imagine, back when Bitcoin was at 10K and we were in road to 1 million, and 10.5 was the entry. Imagine holding that at 100x till 60K. Like, hello, there's $1 million right there, right? So like, it only takes one trade. It's just not always there. It's just kind of an ignorant thing to say. It only takes one trade. So it's a pretty goddamn good trade, but like, really, it is also true on the other side of one extreme to the other, right? So
one followed suit. So
I think that's like, just going back to MD's comment there. Like, if you just ever only take the greediest levels, this is great, because you're in that valley of disappointment, and what you're doing is you're breaking through that theorem, and you can use that theorem alone, and then you can start adding on top of it. So just doing one thing at a time would be, perfect. Your advice for finding for greedy level, complete all of butterfly effect. That would be my advice, because then you'll understand them a lot better. My advice for finding greedy levels would be complete all of butterfly effect. It's like 75, 76 lessons. So that would be your step one.
Very, very simple. But anyways, this wraps up interior trends and what we learned with interior trends. So I just go back to this and say,
there's so much depth and breadth to these charts. There's so many different spots. If you were to break it down and you were to look at a chart like this, you can't stop talking about how many different things are in play. There's trends. There's 15-minute hold levels being hit. What is this one hit? Oh, this one's hitting like an hourly backside or a reverse level. This one's a trend here. This one's hitting a trend. This is making an interior trend. This is hitting that interior trend. These are back testing ladder points. This one's hitting a range. This one's creating also the range trend. This one's hitting a reverse level. Like, there's just so much. It never ends. This one's hitting a greedy point. Like, you could just take one of these theorems alone and become rich off of it, because it's just about getting quality positions over time and not, having to get into, and that's really going to be cool when we do the accuracy boosting, because then we're going to be able to go into a lot of this stuff. So that's really cool when we're going to be able to get to do that at the beginning of next month. But then, you can master one part of this chart, let alone all of the 50 or 60 things that are happening here. And every time you have a move up or down, like, so like greediest levels is always going to be great, because they're just like simple to find, hold levels, low, like very low risk and very easy to get in and out of.
Has the final hold been created? And again,
greedy levels are
final
awesome.
Low has to be hit first, because that's
they're awesome because of how simple they are versus how much they pay out.
The yellow line, we're going to delete all these.
Simplicity versus payout calculation is high on them. Like, it's a good ROI on them.
This one,
good return of investment. If you're always using greedy levels, it's like a simple level to find. Payout is high.
A bit here. That stuff we don't need. Probably just delete a big chunk here.
You could do low leverage swing, but I mean, the theory is the same. AAOAA. I'm going to call you AO because I don't know what the hell to call you. We're going to just call you AO. Yeah, that's fine, AO. But like, okay, so low leverage swing trades on multiple things. So if you're going to do a low leverage swing trade, you'd have to find the best spot to enter, which starts as a scalp, which just brings you back to Bitcoin's chart, because you'd want to find the bottom here to enter low leverage swing trade. So across multiple charts or across one chart, I guess you're talking about whether it's crypto or stocks. And I guess it depends about if you're talking about something that's controlled by a market or not. So you're talking about crypto, then why would you take multiple charts? Why not just do Bitcoin? And if you're doing 4 $100 positions, if you're doing 4 charts times $100, why not just do a $400 singular position, right? Like why not just do this, a $400 singular position? Because you'd have the same entry and exit points across all the charts. Oh yeah, if you're doing different markets, absolutely. Oh yeah, for sure. Yeah, different markets, of course. Yeah, do like Forex, do like a commodities, do, you know, a stock or two. Yeah, absolutely. That would be a great thing to do. In terms of swing trades though, yeah, I mean, if you're, it depends how active you are. I think this goes back now to a question of what's your income level, because then it turns back into, you know, the first thing I think of is like, okay, well, what's my income level? Am I active or inactive trading? If I'm active trading, which is daily trading, I would want to be managing more positions as scalps. If I was a passive trader, which is an inactive trading company, going back to taxation, and I'm making an income that's taxable, then I would go into swing trades that I don't have to manage because my income is coming from primary source somewhere else. So then I would go swing trades if my earnings were inactive, the scalp trades, and possibly even swing / position and scalp trades if my earnings were considered to be active under tax filings. So that's how I would first define it. And across different markets like BTC, gold, commodities, Forex, stocks. Yep. You could absolutely do that, but then it's like scalp or swing. So you tackle that part of it. Scalp or swing is defined by taxation and, you know, where you live in tax brackets. Multiple charts, absolutely. It would expose you to more. And then I would say, am I doing high amounts of money or low amounts of money? Because the higher amounts of money, I'd want to have a more handle on it. So I'd do less markets if it was higher amounts of money. And I would do more markets if it was lower amounts of money. Because with a higher amount of money, I'd want to have a direct connection one-on-one to it. And then if I'm doing singular markets, I would define it down to, am I doing position trades, sorry, not position trades, like spot trades, margin, low futures and derivatives, high options. So then I would break it down into different, like, what am I trading? Spot, margin, derivatives. Like, what leverage am I trading? So then should I be trading? How many markets should I be trading if I'm trading leverage? That's based on how much leverage I'm using. So I would give a bit of a more consideration to just like, I would drop back to like taxation and how active in the position size to help me define and dictate. Altcoins and Bitcoin have the same risk. They essentially, they have more risk than Bitcoin, since Bitcoin controls the market. So I would, instead of defining it, oh, wouldn't it be like, what's your thoughts on several multiple charts? That would be my thoughts. I would define it based on things like taxation, how much income I'm making, how big are my position sizes, and is it active or passive? Because in a lot of countries, you have active and passive, which is, again, going back into taxation. How much do you get taxed on your money? If you're active trading, which you want to pay a lower tax because you're making more money every year on trading, then you're going to want to be doing higher leverage in less charts that you have more control on, so that you can be considered active. So you pay less taxes. Instead of capital gains, you'd pay an income tax bracket. So then I would look at it like that, AO, instead of like just abroad. Like, I would look at it more in a targeted sense and not a heuristic sense.
Really, we go, it has the final low been hit, which is your greediest hold level. When that gets hit, it will create the final hold of the move. So the final hold will be created. We measure this by saying, how much viscosity does it have? Is it still relatively strong, or has this trend been broken multiple times? And
does that help, AO? Or do you have more of like a specific question on that one, like, or like an example of yourself that you'd like to
medium, low, etc.
to include, or more like any follow up on that?
It's fanning out, which
I don't mind answering that. I think it's a great question.
So forth.
I think that can help a lot of people too.
Broken, so like, how much viscosity does it have, and what is it trying to create, right? So the kind of the questions we ask ourselves with trends. So again, the anchoring piece is,
or does anybody else have any other like examples they want to throw out there about that, and as a follow-up to that, or questions about that? Because that's a pretty interesting and good conversation topic starter. That was a good one, AO. That's a great
and say, oh, it had its own
anchor
interior trend like this, distribution to distribution, and that broke
conversation
here,
anchor,
and that broke there, and it created its final low. And that could quite possibly be, actually, this would be accumulation to accumulation. I messed that up. It could be here to here, like this. You know, how much does this trend have left in it?
I'm going to talk about it after the video. So anyways, JCap, because this is an important thing to talk about.
Times, right? Viscosity, right? How much does
talk about all these trades and stuff like that, but if we're not, you know, if we don't have the proper structure and flow, it's kind of pointless.
Right? Which actually the weekly trend hasn't even been created yet. Right there, we'll turn this one purple. we're still in this right now. We still haven't created this, which just furthers my point that we haven't even seen distribution ending on this, because now we should kind of pull back to here, right? Like this, and at least create some kind of swing that can test this inverse. And
that would be a
create
good
something
time to
that's
have that
cheap,
accounting
but
talk. I wanted to make an accounting video back in the day, but
worrying about these,
now would be a good time to have that talk.
variables. Really, the key here is, has that final.
Ultimately, I just ran out of time to make the accounting video, and it was supposed to be a part of the Trading Life series.
Has that created the final?
Also, just it's too much of a sticky subject with so many different countries, so many different laws.
What I'd like to do,
Could never possibly know what's right and wrong for other people based on their own country laws, federal laws, it's even provincial and statewide, let alone countrywide, provincial and state. It changes
on a higher time frame. So it's broken once, broken twice. Let's make sure we do this properly, actually, instead of just assuming that it's done right.
Yeah, I think so too.
Accumulation hard closes to here. So it's broken once. There's twice.
Oh, we'll talk about it in 2 minutes when this is over. Make sure we're not missing anything else here.
3 times at this point, you're at your final hold level, which visually is right here. So
don't really think we are, but
your final hold level creates your final low, creates your final hold. So whatever is in.
That's a great thing to see here again. Also, the same thing we've been talking about all day long, and what I want people to start realizing is that, you're on the 4 hour here, you break the 4 hour final hold level, you go to trend. Trend would be the next thing that offsets this, because I'm assuming my color is purple here. It's a weekly trend. So 4 hour to the next moment, high time frame. No, I just don't think it's going to go to the daily, although it might break over this weekly trend. That daily might be something larger time frame legacy, which it looks like it's a larger legacy trend compared to this interior weekly global or interior weekly local. But this 4 hour breaks, and notice how it goes after that. Higher time frame or higher conceptual piece. Let's not say time frame, because I don't want people to think time frame only. Higher conceptual piece to stop it, right? It's not like it's going to go from a 4 hour to a 1 hour, unless there's something else showing you that it can. But conceptually, 4 hour frontside breaks, final hold level. Conceptually, it needs to go and stop at the next higher concept level or higher theory level.
This
higher moment.
And when it breaks, and you could be right here, which is already tested. So then somewhere inside of this candle right here, you'll have your final moment before this.
That's already tested. So like I said on the chart, that's already tested. So then you would just, go right down to the next set of levels there, which was the 4 hour here. And then that's tested. And then you go down to here, hour, the 4 hour. And then when that breaks, it's already broken everything above it anyways. So.
But it's already tested. So
the interior moment attacks the exterior component.
And this is kind of your final moment, and you break over top of this. I think this is your moment of polarity, because it's your final untested level, which technically would have something inside of this candle then. So you have to hold the range inside of here.
I would even like to see, if you wanted to go one step deeper in this, I would even like to see how you have this right here, back test this. I would almost like to see if this creates an interior origin and you hard close over that origin point prior to breaking the level. So maybe the hard close to the origin inside of there, inside of this little piece right here might even be the key there. Can't really tell on a replay, but that could even be a key there. An interior origin point, or maybe even it was this guy right here. Maybe this was the start of the valley right here. So an interior origin point, and maybe you hard close the 1 degree down, 15-minute hard close here prior to breaking the level might be the long or the polarity. Again, you can't tell here because I can't rip apart the chart on, like it's a replay, right? But it's something I would consider. It's something I would look at and say, oh, interesting. Okay.